We're going to look at accounting for costs, or an introduction to some managerial accounting concept, focusing on job order costing and the predetermined overhead rate. So with a manufacturer, there will be three inventories: raw materials inventory, goods in process, or sometimes called works in process. You can think of this as the goods in process is actually the activity on your manufacturing floor, the products being produced, and finished goods is the same as merchandise inventory for a merchandiser. They're inventory accounts, they have a beginning balance. So starting with raw materials, you have to buy raw materials first, beginning balance plus purchases. That's what's available to use. You will either use it or not use it. And with raw materials, we think of different classifications. But first, let's look at the different expense accounts, also factory overhead, factory payroll, and cost of goods sold. So raw materials, it can be direct or indirect. Direct flows directly into the manufacturing process. Indirect, all indirect costs are first accumulated in an account called factory overhead. It's just a product. Factory overhead is a product cost. Factory payroll, direct labor goes directly into the manufacturing process, goods in process. Indirect labor first goes into factory overhead to track it. And other expenses, you could have depreciation expense, you could have utilities expense, but if it's a product cost, it's called factory overhead. So instead of depreciation expense and accumulated depreciation, I will debit factory overhead, but I'll still credit accumulated depreciation. And with those period costs, I would have utilities expense and cash, but it's a product cost, so I call it factory overhead and cash. With payroll, if it's for my office workers, I could have wages expense and wages payable because those are my period costs. But if it's a product cost, I need to track it separately in cost accounting. Factory payroll is the same as wages expense, except it's only product cost, product labor. So for my factory workers, I'll record, instead of wages expense or wages or salaries expense, my debit is to factory payroll, and my credit could be to wages payable. And then when I assign that cost, I have to determine then, is it direct or indirect? Direct goes directly into goods in process. Indirect first goes into factory overhead. So remember, these are expense accounts. Normal balance of an expense is a debit. Factory overhead will be normal balance, a debit. Then when I'm ready to apply it to the manufacturing process, I debit goods in process and credit factory overhead. With job order costing, I'm going to track things for each individual jobs, but that's going to be on supplemental records. And that's applied overhead, so factory overhead will be applied, and think of subsidiary records tracking each individual job or job cost sheets. That's all going into the totals in goods in process. Now, how is this allocated? We often use a predetermined overhead rate. It's an end-of-the-year estimates of next year's cost. So you also want to think about what's driving your cost. This is sometimes called the activity base. You're going to base it on direct materials, direct labor. You could base it on machine hours. Most common is on direct labor, can be direct labor hours, direct labor dollars. So there's many different ways you can allocate, but we're going to focus on just direct labor for this demonstration. And how do you calculate that end of the year estimate? Well, you take the estimated total overhead you're expecting to have next year, divide it by your estimated activity base, and that is your predetermined overhead, and it's always expressed as a percentage. So let's say you're expecting a total of $750,000 total factory overhead and $500,000 total direct labor. So this is simply your estimate that you're going to use to allocate overhead. It's just a simplified way, so it saves time and money for tracking things. And if the estimate is off, you can change it. So these are your job order costing sheets for jobs. Remember, every product will have direct materials, direct labor, and factory overhead. So what do? Well, first you're going to look at what's your direct labor if this is your chosen cost driver. How much factory overhead do I apply to each job? Based on that predetermined overhead rate, I take the dollar amount times 150%. That's how much I'm applying overhead to each job. Now, is it going to be exact? Of course not. But cost accounting doesn't have to follow GAAP. Goods in process, these are debited because you're moving it out of factory overhead. You're allocating it, crediting factory overhead and debiting goods in process, and tracking it in job order costing to each individual job. Now, what if it's off? What if your estimate's off? In this example, we have a total actual expenses, $13,000, but throughout the year, using a predetermined overhead rate, I only applied $12,750. I'm simply going to make an adjusting journal entry. I'm going to debit cost of goods sold and credit factory overhead. So when you're adjusting for over or under applied, you're simply think of closing out the overhead account. If it's over applied, then I'm going to debit factory overhead and credit cost of goods sold. Now, how you learn this depends on where you are in your degree path. Accounting principles, it's usually introduced as the assumption all amounts are immaterial, and the rule is if it's immaterial, it's always allocated directly to cost of goods sold. You either debit it or credit it, depending on if it's over or under. In cost accounting, you follow the true rules. If it's a material amount, and that's judgmental based on the company, it will be allocated proportionately to goods in process, finished goods, and cost of goods sold. But again, if it's thought to be immaterial, it all goes to cost of goods sold. And that's your introduction to cost flows for manufacture.